Welcome to The Explainer. Today, we're taking a deep dive into the healthcare giant Abbott Laboratories. From its huge pandemic highs to its current strategy, we're going to break it all down, and we'll be looking at it through the eyes of an investor. All right, here's how we're going to tackle this. First, we'll look at Abbott beyond the pandemic. Then we'll get into the bull case, both the growth engine and its stable foundation. After that, we've got to look at the bear case, weigh the risks. And finally, we'll get to the investor's verdict. Okay, Section 1. Abbott beyond the pandemic. So first things first, we really need to get a handle on what this company looks like today. Because, it's in a massive transition, moving past a really unique period that was, let's be honest, all about one single, huge and temporary source of cash. So a lot of people might think of Abbott as just one thing, but really it's a mix of 4 different businesses. You've got medical devices, which is the biggest slice of the pie and growing the fastest, but then you also have diagnostics, nutrition, and established pharmaceuticals backing it up. And that mix, that balance, is really the secret sauce to its stability. And believe me, that stability has been put to the test. I mean, the single biggest story for Abbott lately has been dealing with the nosedive in COVID-19 test sales. Now, everyone saw this coming, right? But it still created this huge headwind that the other parts of the company had to fight against. All right, Section 2, the bull case, focusing on the growth engine. So with that big headwind we just talked about, what's the good news? Why are investors optimistic? Well, let's build that bull case, starting with what's really driving the company forward. Okay, look at this number. 13.4%. This is absolutely the key. In 2024, while the company was still dealing with that drop in COVID money, its medical devices business grew by a staggering 13.4% organically. That's not just making up for lost ground. That's a huge signal about where Abbott is headed. And this wasn't just a fluke. That amazing growth was part of a run of, get this, 10 straight quarters of double-digit growth in medical devices. 10. That's the kind of consistency, that relentless performance that growth investors are always searching for. So where is all this growth coming from? It's not just one lucky product. It's a whole portfolio of absolute blockbusters. You've got the FreeStyle Libre, which is just crushing it in the massive glucose monitoring space. Then there's MitraClip and TriClip, which are total game changers for repairing heart valves without open heart surgery. And you can throw in incredible new tech like the AVIR leadless pacemaker. You see the pattern here? It's all about leading-edge innovation. And this all feeds into what you could call a growth flywheel. It's a really smart, self-perpetuating cycle. See, the success of these market-leading devices brings in a ton of recurring cash. They take that cash, pour it back into their R&D, which then cooks up the next round of innovative products. It's beautiful, really. Success literally pays for more success down the line. Okay. Section 3. We're sticking with the bull case, but now we're looking at the stable foundation. Because, look, a high-powered growth engine is great, but you need a solid frame to put it on. So let's see how the other parts of Abbott provide that crucial stability. Now, this is a really clever move. In the diagnostics division, the headwind was pretty obvious, right? COVID test sales fell off a cliff. But here's the tailwind, and this is the genius part. To run all those tests, hospitals and clinics all over the world had to buy Abbott's machines. So now, Abbott has this massive global network of their hardware already installed. It's like the razor and blades model. They've created a huge captive market for all their future higher-margin tests. And the other 2 businesses, they're like the bedrock. The established pharmaceutical segment is super steady. They sell trusted, branded generics in emerging markets, which brings in reliable cash without all the pricing headaches you see in the US and Europe. And then you have nutrition. Think Ensure, Similac. They had a major product recall a while back, which could have been a disaster, but they recovered their #1 spot. That just proves how incredibly loyal people are to those brands. All right, moving on to Section 4, the bear case. So we've heard a really strong argument for Abbott, but hey, no investment is ever a slam dunk. We have to look at the other side of the coin and really dig into the risks. What are the things that should make an investor nervous? The whole bear case really boils down to a few key worries. First, the competition is just brutal. We're talking giants like Medtronic and Johnson & Johnson. They're not just going to let Abbott walk away with the market. Second, there's always regulatory risk. The FDA is watching everything, and one bad letter or a delay on a new product can seriously hurt the stock. And finally, there's just plain old execution risk. The pressure is on, and they have to keep hitting home runs to keep investors happy. And this chart really puts things into perspective. Just look at that medical device growth for Abbott, 13.4%. It's just blowing its peers out of the water. No question, it's best in class. But now look at the operating margin. It's healthy, around 22%, but it's a little bit lower than the other guys. And that's a key question for the bears. Can they keep up this amazing growth if their profit margins are a little tighter? Okay, let's bring it all home. Section 5, the investor's verdict. We've got the bull case, which is all about this incredible innovation engine. And we've got the bear case, which is worried about competition and execution. So how do you, as an investor, weigh these two stories and come to a conclusion? It really comes down to this simple choice. On one hand, the bulls are betting on Abbott's amazing track record of innovation and their smart, diversified business. On the other hand, the bears are saying, hey, the competition is tough, things can go wrong, and the stock's price already assumes everything's going to go perfectly. And that brings us to the price tag, the valuation. If you look at a key metric like the forward PE ratio, you see Abbott is more expensive than a giant like Johnson & Johnson. It's priced pretty much the same as its main growth rival, Medtronic. So what does that tell you? It tells you that the market already expects great things from Abbott. A lot of that future growth is already baked into the stock price today. So in the end, it all boils down to this one question. You've seen the incredible growth engine, you've seen the stable foundation it's built on, and you've seen the risks. With the stock already trading at a premium, can Abbott's innovation engine keep firing on all cylinders, stay ahead of the fierce competition, and actually justify that price? That's the question you have to answer for yourself.